morning. Good morning. So we have a very interesting panel with us today, and the topic's also something that's very close to my heart, which is financial inclusion. So just to quickly set the top context before we get in. So financial inclusion has been something which is always considered important. It's been a very active part of many governments' agenda and regulators' agenda. To kind of link between MSMEs and financial inclusion as a whole, we know MSMEs obviously constitute a whole array of businesses, of which many of them are own account enterprises themselves. So financial inclusion for an individual becomes as important as financial inclusion for MSMEs as a whole. So in that context, I think what we want to do today is to understand what is happening, what are the differences in terms of approaches, and how we're enabling better financial inclusion for individuals as well as for businesses as a whole. So to begin with, let me start with Mr. Mittal. Just to get a sense so that you can lay the groundwork for us in terms of what SIDBI has been doing in terms of MSME financings and where you think gaps still exist.
So, opening batsman, huh? So actually what Mr. Atish Singh gave you a glimpse of and his kind of opening remarks, there's not much left actually. He touched almost everything of what is there in the MSME space. Right from the credit gap in the MSME sector to fund of fund kind of a thing, TREDs, working capital financing, NTC issues and everything, he touched. But if I have to take a few things, so there had been different phases of MSME credit in the country, and SIDBI has been part of that journey since 1990. But of late, there are certain things, we are an institution which is, and we are under an act of parliament. It is meant for promotion, financing and development. SIDBI, you won't find doing financing alone. We do promotion and development, and we are an integral part of Ministry of MSME as well. In that context, a lot of institutions have been created by SIDBI in partnership with various stakeholders or by its own also. So what we believe in is, as a DFI, you showcase first, you do proof of concept, scale it up to a certain level, and then pass it on to the industry. Scale it up or create some kind of support system which can help MSMEs, which can help other banking institutions to lend more. For example, microfinance institution, which we talk, which is roughly a 4 lakh crore industry. When it started about 25, 30 years back, SIDBI helped NGOs to lend first, then help them to become NBFCs, then help them to become even small finance banks. And all these times, we have been lending also to them. We have lost money in that process, we have gained money in that process, but we have been together. And right now this has been accepted by the whole ecosystem, microfinance institution. So that's what we have been doing with Fund of Fund for Startups now, equity space. And equity space, we have been lending to individual enterprises, startups, and then created this Fund of Fund with the Government of India money, DPIIT money, and a lot of AIFs intermediaries have come into the picture. And these intermediaries are now reaching out to the startups, CGTMSE in partnership with the Ministry of MSME. So what SIDBI can emphasize at this point is the partnerships, strong intermediaries are very important to reach out to that last mile of MSME. There was a talk of MSME credit, and that's 27 lakh crore, 30 lakh crore figure. This has been there in the market for some time. But for the first time, what I have noticed is that MSME credit outstanding has exceeded the gap. Earlier, the MSME credit would be 15 lakh crore, 20 lakh crore, and the gap still stood at about 20, 25 lakh crore. But now, for the first time, I have noticed MSME credit has reached 34 lakh crore, 35 lakh crore, and the gap is being talked about is still at 27, 28 lakh crore. So, we are growing. The MSME credit outstanding growing, banks are growing very fast, and other players, NBFCs are going very fast. NBFC, MSME credit outstanding year-to-year growth is phenomenal. And that's where probably that has to be seen as an alternative, as another route of extending MSME credits. A lot of things to talk about, a lot happening. And SIDBI as an enabler, contributing a lot, trying to contribute towards development of the different ecosystems so that things happen fast and there is a multiplier effect.
Thank you very much. I think that's very helpful, and it's quite reassuring to see that the credit is growing. Ms. Buteau, if I can come to you. So, this is great data that Mr. Mittal's provided, saying that, credit outstanding is growing fantastically, which is fantastic. But, in terms of finances that goes across the verticals of MSMEs, particularly small businesses, do you think there's still a problem there, or do you think credit is getting concentrated in certain sections of the MSME population?
Yeah, thank you. I actually love the introduction by Mr. Atish Singh, and as well your comment. My role is, and I think the first thing when I arrived in India maybe 17 years ago, was to look at this topic of small business funding. So it's very dear to my heart as well. I would say if I could categorize where I am, I'm like mud to brick to boardroom, I guess. That's the role where I aspire to play, in a sense that taking all this information on the ground and bringing it up for the collective intelligence. And I think Sir also mentioned a very good point, and Sir as well, as the importance of data. I think we're having many data platforms, UPI, and there's a plethora of apps. I think data is meant also to create intelligence together. So I think we've not received this step as well, where our ability to utilize that data to, I guess, address coordination failures, I would say. So a lot of the work, I think, critically, and I think people from SME and also Sir from SIDBI also as well, is the ideal of segmentation. When 90% of your businesses are in one category, in statistics perspective, that's not a lot of diversity, no? So you have a lot of heterogeneity in one category. So some of the recent work we've done is we tried to establish a little bit, okay, if we look at this term pyramid and a pyramid, and they function vastly differently. And this is another area where I think it's critical to look at and where the underserved population remain. And it creates, sometimes they're stuck in a cycle of disparity. Even if they take every business box together, they simply cannot catch up. If you're a race here and a marathon and you're here and you're running quicker than the other guy, it might take you a very long time to catch up, no? So I think that also needs to be addressed. When you see a lot of the lower income, also you see the gender gap. You see a lot of issues with women entrepreneurship. For no reason whatsoever, they are as productive. They actually contribute to the betterment of society, because it is also shown in a few studies that although they're business people, businesswomen, they also help to contribute to the household, divert funds towards increasing human capital, like investing in their family as well, which is a good sort of like outcome on the longer term. It's not just business per se. You see a lot of unfairness, and again, I stressed on coordination failures. When you see that, for example, when a woman goes to the bank, she's most likely to be denied funds, not because the banker is gender biased, only because they have a set of protocol, for example, that probably don't adapt to women's culture or structure. So a lot of the, like in the livelihood segment, the smaller, like below 3 lakhs, where a lot of these like underserved segments are, a lot of these women are in businesses that are very different than men. So if you go to a bank, and this idea of the risk assessment, no? So these bankers locally, they will know what type of business, how does it fund, etc. If women come with a different set of businesses, they don't have the ability to assess as well. The second topic that lays against women, which are all concentrated in this lower segment, is they have less access to networks. Women are invisible. 70% of women have their business at home. So they don't have access to networks, and I see India functions in terms of markets. People connect with each other, business in a very more particular system. So if you're in an area where you have colleagues, your peers that informally help you about business advice, creating a business plan, etc., you already have a leg up. So if a woman goes to a bank and says, I have this idea and the business plan is not okay, I think what happens is if you talk to the banker's side, he said, no, I'm gender neutral. But you're not understanding the social norm differences that would help integrate. So I think that coordination failure has to, because I've been in rooms where dialogues on both sides and nobody wants to point fingers, no? So I think that's where my experience from mud to brick to boardroom, I think, would occur. The other thing is that I'm all for digital, and I think it's a fabulous way to revolutionize, but one has to be cognizant again of how people are accessing. See, if you have to apply online, who has internet, who has a cell phone? how our system gender intentional, in a sense that when I even talk to people in government, and now like this convergence of government would be required, I guess, when you talk about people at MeitY, they're trying to ask us, if we do things like OTP, and if you have these systems, and the woman has a shared device, and the husband has a phone, how can she apply for anything online, no? So things need to be also gender intentional as well. And these are all, I think the system is a brilliant place. I think I'm Canadian. I guess now I'm a Madrasi Canadian, I guess. But, and I see the systems far quicker here in India. Like back home, my relatives still pay rent by checks, no? I have not seen a checkbook in a very long time, only when I go back home. So this is congratulations to India, the progress. But if you're able to solve a lot of these small coordination failures that are within outreach, and the speed of digital is quite critical as well, and I think it's going very fastly, maybe too fast for what is able our system to absorb. Sometimes, for example, we need to be cognizant about the digital issue as well. We did an experiment that we sent people in the area of Tanjavur, some women, a little bit of graduated self-help group. We just said, why don't you go to a bank? We had 24 people. We had 21 women, 3 men, similar background. The 21 women went into the bank. They came out almost crying. The bank manager just said, why don't you apply online or apply for a government scheme? They were afraid, apprehensive, and we actually have voices. And I don't want to vilify anybody. Because on the bank side, they want to go online. Fair enough. Maybe these small loans, they go online. The 3 men that went, they got loans. One got a loan of 20 lakhs without too much advice. So I do think that these are small samples, but I do think it's a coordination failure, no? Even if, they say, okay, maybe you're better served by this online government system, if they don't have access to an online system, how do they go about it? And how do you build trust on that? The other thing I would add, I can talk hours about it, I'll just add one thing, is that with digital comes security. The speed by which things are coming and people are saying apply online, etc., people are not aware of the quick danger of sometimes just some of these banking issues. My own mother in Canada lost all of her savings. She lives in a village in Canada, and she called me one day. She said, Sharon, I made a good friend, and then suddenly they built trust. And she said, I transferred a lot of money through cryptocurrency. And I'm just like, my mother can't even download an app. How did someone was able to train her to use cryptocurrency, no? And I told her, you cannot retrieve cryptocurrency money. She was not aware. So if that happens in Canada, imagine in India in small amounts that have huge repercussions. I'll stop there, and I'll let other speakers speak, yeah.
Thanks so much. But the gender, the funding gap is quite huge. IFC in 2019 estimated that the funding gap between male-led enterprises and women-led enterprises was about how much? 1.7 billion? No, $1.7 trillion. And this was as of 2019. And even in India, I think NSSO data in 2019 says that women-led enterprises only receive about 5% credit as opposed to male-led enterprises which access about 11%. So it's data-backed and it is a huge problem. But you did touch upon digital, and I think this is a great place to get Mr. Sehgal in. And to also kind of draw from what Mr. Singh said in his previous conversation, when he mentioned that digital has done a lot of things and fintechs are helping, but in terms of regulatory forbearance, there has been a little bit of a problem. But before we get to the regulatory forbearance of fintech, but how has digital helped? What has been the role of technology, and how has it simplified, complicated things?
Right. And I think Mr. Secretary, Mr. Singh has touched upon most of the areas that I'll talk about. In terms of data and technology, there are essentially 4 pillars, which have kind of broadened this entire financial inclusion theme. For a long time, the SME lending in this country was collateral-based and credit performance data-based, right? And that, of course, put some restrictions on what can be done, whom can be lent and cannot be lent, right? And, as Mr. Singh was also pointing out, that if we expand beyond the credit data, what we call alternate data in our industry parlance, which would include, all kinds of data, GST data, income data, utility data, mobile bill data, transaction data, ONDC data, marketplace data, all kinds of data, right? Those are good proxy indicators for evaluating a credit worthiness of a SME borrower who would otherwise not have, let's say, a credit history, for example, right? Doesn't have any track record, so the banks are reluctant to lend them because there is no track record. But now many banks have started to, pivoting to this. In fact, as early as last week, SBI chairman said, that 34,000 crores of loans have been lent to SMEs purely by the cash flow lending instead of a collateral-based lending, right? And this is what we're seeing now, that data has become the new collateral, right? So that was the point on the, expanding, going to the alternate data. The second point was again on the, the risk management, the risk modeling. Again, Mr. Singh touched upon that. If we have all this data, what do we do with this data, right? Somebody has to write a model, right? Somebody has to make sense of it, right? And that's where, the risk modeling comes into play, whether it's a statistical based model or it's an AI based model, expert model, whatever model you have, right? These models will come into play. They will then decide, they will assign a score or a rank, then to decide, or a rating, then to decide, whether a particular SME borrower is credit worthy or not worthy, and if at all worthy, what kind of a optimal loan can be extended to that particular SME borrower. The last 2 points in this entire data technology theme is, the what we call digital infrastructure. All of us know very well about UPI. We know very well about Jam Trinity, India Stack, Aadhaar, and so on and so forth. But not many would in this room itself, if I were to ask, if you know about account aggregators, if you know about Open, for example, not many would know about, right? Open is the next level of India Stack, right? Just as UPI was a standardized, free-to-use digital infrastructure for the payment space, Open is planning to do that for the credit space, right? It's a collection of APIs, right from loan origination to collection to disbursement, everything, right? And they're free to use for everyone, and obviously that is still evolving. Account aggregator is another good policy framework / initiative, which lets everybody share their data with the touch of a fingerprint, and that makes the data sharing absolutely paperless, frictionless, and obviously reduce the costs on that. The final point is digital platforms, right? I know it was said that NBFC platforms are doing a great job. How do we bring together data? How do we bring together these new models? How do we bring together this digital infrastructure into a one small app which can disperse a SME loan in a paperless manner in 10 to 15 minutes? That's what the platforms are trying to do, right? Whether it's through embedded finance, or through their own, models, they are planning to do that, and that's what is another important framework, when it comes to data and technology. And I believe, these are the 4 primarily enablers in the data and technology space, which will further the cause of the financial inclusion.
Perfect. Thank you. Yeah. Yes, please. Yes, please.
I'll just try to present a pictorial. So some 7, 8, 9 years back, microfinance, let's take the history. How would you get a loan approved? You'll collect the document, everything, and then send to the head office. Head office will take 3 days, 4 days, and then send an approval for a 20,000 loan. And then the next group meeting, it would be disbursed. This used to be the usual thing. And as around 2016 or 17 or so, handheld devices came in everybody's hand, and now that jam, everybody started using Aadhaar-based verification. So the KYC was done, and based upon their GRT, everything started happening online. So client was coming to know about the sanction or the rejection very, very fast. And in case of MSME lending, I take you to somewhere around 2018. OPL, online PSB loans, was formed with SIDBI in the lead. And in that, we first came as a concept of in-principle sanction in 59 minutes. 59 minutes, why it was given? Actually, it was happening in 59 seconds only, but we were not very confident of. Sometimes, digital infrastructure will work or not, so that's why 59 minutes kind of a thing. Less than an hour was considered to be something, a very idealistic situation. So it was in-principle sanction. After that, it was followed by a visit and then a formal sanction, and then disbursement. But even then, this crashed the timelines by about 1.5 months, 45 days. This for even getting an in-principle sanction in 59 months, 45 days. It removed a lot of fears of the bankers because everything got standardized. There was no deviations in that. After next phase, the bankers started disbursements on that platform that in principle got converted to formal sanctions. And then now disbursements also, as the figure told by Mr. Manu right now, the 34,000 crores. Most of these loans are still working capital loans. The next phase is going to be STPs for term loans. So that's where a lot of work is happening. That's where a lot of things are coming. Still, we have not been able to decode or codify how to give term loans online. Still, there is some kind of physical element involved in that. So that's where a lot of work will happen, and account aggregators and all. This is also a work in progress. This will take some more time to get stabilized. This has covered 60%, 50, 60% of the universe. But these are some big things. Earlier stages, technologies were not that complex, not that difficult to master. So the results were coming very, very fast. Now things are evolving. Databases are evolving. And another big thing, because we are talking about what is going to happen in future, is about Udyam Assist portal, which has got roughly 2.6 crore registrations on that. So these are the people who are below GST threshold, 40 lakhs limit. They are below 40 lakhs limit. Maybe some kind of a formal credit, pre-approved formal credit. That would be the way forward. So a lot of work going on, and it's evolving. But digital, I just thought I'll give you an overview of how in last 6, 7 years, 8 years, how it has changed. Thanks.
Thank you. No, I think that is hugely helpful considering how long it used to take and how fast it's done now. And I think even in the previous budgets, there has been this concerted effort to minimize, the time taken to disburse MSME loans. I mean, to the extent where they did say half an hour. And I think that's the genesis of Open and all of that. But that also, to Mr. Singh's point, has led to a lot of regulatory issues probably. And so if I can come to you, Mr. Seth, what do you think the landscape should be in terms of responsible lending? See, because you don't want MSMEs, given what Sharon said earlier also, the information access, all of that. So how do you protect MSMEs? So investor protection in that sense. And how do we ensure that those who are getting into digital lending are doing so responsibly? What do we need to do?
Sure. No, I think first of all, wonderful conversations, and I think entire aspect of financial inclusion, MSME is being covered. And I must say, before I get to the point what you asked, I think all of us would agree that, the amount of support, the amount of focus, and the amount of ecosystem collaboration, which is coming across to basically support MSME in the right spirit at this moment, I think it seems to be quite, I would say in the right direction. While, obviously the country to become Viksit Bharat has many other priorities, as we all know. But I think what we see generally that, MSME, everybody has realized that MSMEs need that kind of hand-holding. And obviously financial hand-holding or financial inclusion becomes a core to the whole ecosystem. Because without finance or capital, you can't really build businesses, right? So first of all, I think from intent perspective, everybody is aligned, and that's a good beginning to start with. But like as Mr. Mittal mentioned, Mr. Singh, Manu mentioned, that the journey has been, again, very choppy, roller coaster ride, and also within MSME, you have micro, you have small, you have medium. So this cohort of MSME actually is the most diverse cohort in the business. Because when you say consumer loan, you are able to easily identify it based on the salary, non-salary, then you have what's the income segment, what's the demographics, etc., and what's the purpose of the loan. I think when you come to MSME, obviously it becomes much more diversified cohort, and anybody who have migrated from, let's say, microfinance to a shopkeeper could also be MSME. Anybody who has just done a degree from IIT and started a startup could also be MSME. And anybody who's running a traditional business as a third generation, maybe a trader in Varanasi or for Banarsi Sari, or somebody is doing in, typical, our traditional businesses could also be MSME, right? So the problem, where it is coming, and I think converging to the point what you made. See, I don't see the intent of giving loan is an issue. Everybody is looking forward to build that portfolio. In fact, when we work as a credit bureau or a credit decision company with most of the clients, we see that MSME portfolio, business loan portfolio is a high priority item. But yes, easier said than done. How does it get translated? But because the risk which you talked about, that whether it's a digital part of it or whether it is a intent part of it or whether it is a credit worthiness part of it, and some part of that Mr. Singh mentioned, what's happening is that, I'll go to the fundamentals of the problem. Fundamentals of the problem is actually the, first of all, financial management and financial prudence of MSME. See, the credit comes secondary. Because credit is all about that. See, credit, any institution giving credit, whether it is a SIDBI or whether it's a public sector bank like SBI, or is it a, NBFC or a private bank, they are looking for somebody to be able to fulfill their obligation of repayments over a period of time. Now, whether that's based on cash flow, whether term, or whether it's on against asset, etc. The challenge, first challenge starts with that most of my MSMEs in India, the financial literacy and financial prudence levels are very low. And because the reason is many of them do not keep their records properly, they don't have the returns filed properly, they don't have their assets. If they bought a shop, many times the documents are not clear. If they are buying a material, many times they are not having a goods receipt note, they don't have the electronic accept, or they don't have a mini ERP system to be able to produce documentation. So that's the one point, but I know that's not the real point of discussion here. But the second point when it comes to that, if you make digital, chance of, fraud, etc. is there, or there are other challenges. But I think some people have tried it. I know SBI has implemented system wherein they are in a position to make decisions in, let's say, 15, 20 minutes. There's a BRE, business rule engine they have implemented, as Manu talked about, for, current account, proprietary owners. Account aggregator works very well. There are people who are falling on the edge of consumer versus MSME. So they have some assets or some loans on consumer name and some on MSME name. Account aggregator works very well as a surrogate data. If they are existing to bank, it works very well. If they are, last point is that if they are anchor-led, or if they are part of value chain financing. So let's say you are a supplier of Amul, or you are a supplier of Whirlpool, you are part of that cohort. So even if you are new to credit, even if you are new to bank, you are part of that collective, ownership. Yeah. So I would say all this has to come together with so many other things we have on the agenda to talk about, technology, AI, etc. But these are the fundamentals of what needs to come together. If that comes together, then I think there is a way forward to control whether it's a fraud side of it or whether it's a de-risking the delinquencies of the portfolio. Both sides can be done. Because there's a hunger, there's a support of government, but at the same time, some of these moving parts needs to be a little bit aligned better. And it will also come to the gender point because, RBI has, whenever they come to us, talk to us about as a bureau, they always say there has to be complete discrimination. There cannot be any bias or discrimination based on any parameter. It can be gender, it can be PIN code, it can be demographic. So as far as bureaus are concerned, they have to be completely independent. But yes, that discrimination creeps in, or bias creeps in at the time when the lending is happening because of other parameters, because the core parameters are not very clear, right? So that's where I just wanted to conclude that with my point.
Absolutely. Thanks, Sachin. Manu, I'd like to bring you back here again. So, we've talked about the role of digital and we've said that it's done a lot of wonders. But I do have to ask, in terms of the MSME sector itself, how digitally included are they? I think UPI has done some great wonders for them, but that's not enough in terms of being able to access loans and credits. So how digitally included are they today? And is it becoming some kind of prerequisite in today's stage of technology? Is being digitally included becoming a prerequisite to be financially included?
So absolutely. So when we are saying financial inclusion, for the purpose of this discussion, I'm talking about credit inclusion, right? That's what we're talking about, right? So obviously, as we were saying, that the old method, paper-based method, which used to take 45 days, obviously, those customers will be either excluded or will be delayed in terms of the access to credit, right? And if there is a data, if there is technology available right now, the digital means are available and customer is financially literate or even in an assisted model, customer can access those digital tools, it shortens the process, it reduces the overall transaction cost, banks or NBFCs can reach a much further level of customers, it reduces the overall time and brings the efficiency in the process, right? Having said that, I believe, obviously this is just the beginning, right? This is early days for us, right? Oaken is still to see the light of day. Many of the digital infrastructure is in place, right? And, people have started using it, but, there is still a long way to go. And obviously, as we progress as a nation, these things will evolve, and we will believe, just as what UPI did to the payment ecosystem, right? We believe that, eventually, the credit system ecosystem should also, be completely paperless, mobile-based, digital. Yeah, that's what we hope for.
Perfect. Thanks so much. Sharon, let me bring you in here, since you did touch upon this in your opening comments. Forgive me. So we are kind of tending towards a situation where digital inclusion is kind of becoming a prerequisite for financial inclusion in a certain way. But we do know, and as Sachin correctly mentioned, whether the systems, even if the systems are built in a non-discriminatory manner, socio-economic milieu and things as it were, allows for discrimination to creep in. So when you're talking about access to technology for small businesses, particularly women-owned businesses, which are not maybe as digitally included, how do you then see this changing? What do you think needs to be done? Do we need to focus on getting them digitally included, or do we need to find another model so that they don't get left behind?
Great. I can talk overall as well, because women are part of a wider scheme because they form the majority. What I see in digital, I think, again, it goes to coordination failures. One is, do people have internet? Do people have access to cell phones? Do the people have things work? And what I see also is a huge rural-urban divide, where actually for the first times I see them losing out on financial inclusion aspects, because a lot of the systems where, for example, a lot of migrants have their bank account in the rural area, they're on UPI. If something happens to their bank account, their local bank account won't cater to it. So people get off the system and not able to go back. They have bad experience, and I see a lot of that in the underserved segment in the urban area, where you see your security guards, your housemaids, people who form the fabric of it. So there needs to be a facilitated process to better enable that. Another coordination fail, I can see, like, my bank account itself was frozen because things became digitized at, I won't say the bank I'm at, but suddenly my visa had to be, I had to give a certificate of my visa renewal because it's automatic. And they didn't understand, when I gave it, they didn't know how to automate it in the system. So I was 10 days without access to my bank account. So you can imagine, and actually, I can say the bank, Mr. Vagul passed away, but he was a chairperson a long time back at ICICI Bank, and he could not fix the system. So I'm just imagining a poor person having these coordination failures where digitize went so quickly that we forgot that we're all human structures and we need to work together as well. So a lot of the stories, so there's two things. When I looked at the data, looking at connecting, so I did a bit of analytics. PhonePe gave their UPI data online, and I connected it to UDIAM registration. It is actually these small businesses that are driving UPI payment. And I have to determine whether it's on the demand side or it's bidirectional on the UPI side, but there is still movement on that. So the fact that women lose out is because they don't have that small business as well. But when you see, for example, on ONDC, and ONDC, I think it's still a bit lagging, but more women, I think 20% of women are small business, and 30% on ONDC are women. So you see, because women do business at home, there is hope and potential. So like to interact on that. So my 2 cents is that we have everything we need. We might need to take back, look, take stock, make sure that we're all at the same pace, and make sure that we include it. We can go very fast by ourselves, but that's term that if you want to go far, you go with everybody. If you want to go fast, you just go by yourself and things like that. So I do think those things. That while I didn't want to send a sort of like a negative tone of a digital, because I think it's one of the most fabulous things that will bring us forward and connect to people. In paper, it's pretty much okay. But when you go, and because I go in the field and I talk to people, like recently we did a huge piece of work in Meghalaya, where very few people, they have UPI, but very few merchants utilize it because they don't have connectivity or they don't have enough access to it. So those problems have to be resolved to fully put the system on steroids, I think. And I think the dimensions of poverty and those divisions that we thought before, like the old school development, it'll change. When we think, like I mentioned, it's might easier to solve for urban because there are collectives. When I see national reliability solving for women, very simple, or other forms of aggregation where you have farmer FPO and the collectivations, it's sort of the urbanization, the migration, the thing you're finding where people are fragmented. I think it's a much bigger problem.
Fair enough. Mr. Mittal, let me bring you in here. You know, because this funding gap seems to be a recurring issue, I think, across developing economies and particularly even in India. So, as SIDBI, have you, and because now the union budget also kind of looks at a gender budgeting model that's there, but in SIDBI, have you noticed any trends in terms of, you know, money going to women-led enterprises versus male-led enterprises? Have you tracked? Should you not be tracking? Any insights?
So, first, I don't think neither SIDBI nor any other banker discriminates on the gender. So it's not on the basis of the gender. The policies are gender neutral. Sometimes there could be some incentives for women entrepreneurs, women enterprises to come in the form of lower promoter contribution or an interest subsidy, or maybe sometimes even CGTMSE offers a lower guarantee fee for the women-led enterprises. And there are so many other schemes as well. Stand Up India of the Government of India, which has been able to promote around 200,000 woman-owned enterprises, and then its first phase.
Mudra as well, I think.
So Mudra also has a significant number of the women enterprises, and then second one is now the Stand Up India second phase is starting, where the higher amount of loans would be given there. So it's not about the bankers' policies being having gender biased. It's about creating a pipeline. So how do we promote, how do we strengthen women prospective entrepreneurs? So that's where the key lies. So for a banker, a risk is a risk. Whether it's by a woman or it's by a man, a risk is a risk. Ultimately, I have to get that money back. So his policies are gender neutral. So if we have equally good women entrepreneurs, banker will not have any hesitation in doing that. Example I can tell you is about fund of fund for startups, where a lot of women-owned AIFs are being set up. Alternate investment funds are being set up. There it's a very, very big share of women-owned AIFs. And then again, you know, the bankers or the investor community is not discriminating over there. So in India, this is good that over the years, in terms of the jobs, a lot of women are coming professionals, they are coming forward. And in the next stage, I believe there would be a lot of women entrepreneurs also going forward. Right now, this phenomena is limited to mostly either large towns and maybe in the rural settings. Because, you know, I've seen, including my mother, who was not hesitant to pick up a enterprise in the form of having 2 buffaloes to feed all of us. So, so this kind of thing happens in rural enterprises. There is no discrimination, but the tier 2, tier 3 towns still, you know, need to come to the terms, and so a push probably on promoting women entrepreneurship, having some kind of a policy impetus on in particular that field would be helpful. Bankers on their part would continue to support through some incentives and all, but in terms of risk assessments, I think they have to be neutral.
Absolutely. But just out of curiosity, you know, data that you have collected, I mean, obviously no policy will ever will discriminate on gender, but as we said, discrimination, maybe discrimination is a wrong word, but I think the imbalance kind of creeps in for reasons apart from, you know, public policy in the way it's set out. But do you, you know, data that's coming out from various reports, but do you see that also being reflected in your own data in terms of what is happening?
Of course, yes. This is being reflected increasingly. We see a lot of women entrepreneurs, women associations coming forward, asking for our presence in the events, and then, you know, so it is increasingly being felt. But still, the numbers are far lesser than what it could have been in terms of, you know, ratios. अभी 50-50 तो होना चाहिए जो
Yeah,
मुझे
absolutely. So it's getting better, but we still have a long way.
we still have a long way.
Absolutely. Thanks. Sachin, let me bring you in, since you did mention AI. I think, there are 2 points that I do want to discuss before we can throw it open for the panel. And the first, I think, is where we are with technology now, but with AI coming in, right? Where do you see things moving? What's next? How do you think we will leverage that in terms of financial inclusion? Would it be in terms of data, sorting it and sifting through it in a better way? And how do you see that working?
So see, as we are seeing, AI is sort of getting into our life in all aspects. I mean, the starting point, not related to lending, is Digi-Yatra. You just walk in and it's a AI. It recognizes your face and you walk in, right? And that's a very beautiful use case. So same thing on lending or financial inclusion perspective. See, it is starting from the application, what you're writing. I mean, it could, lot of times the applications are being filled by applicants. They don't have sufficient data to fill. They are filling wrong things, etc. AI can be used to basically optimize that. There could be like address checks. Like, you have a different address in bureau, you have a different address in the bank, and you have a different address, let's say, in your Aadhaar card or any other KYC document. AI could figure it out that is it a fraudulent application or is it a genuinely a case of basically person moving 2 or 3 places, and yeah. So that's the one, I'm just giving simplest of it, right? Second is that, in case of PD, which is called personal discussion, in case of MSME and business loan lending, there's a lot of cases wherein you have to physically go and do the recce of the whole place and figure out whether the shop exists, whether that person exists, whether that business exists, right? With use of technology, AI, etc. I mean, we have already seen during COVID times, even insurers use that, live detection test, etc. Now that's become very common. Even MCA, Ministry of Corporate Affairs today, for DIN validations and all, you do a live detection test and you don't need to really go and prove you are alive, right? Even for pensioners is happening. So I think if we go to the whole journey of lending, starting from filling applications to the KYC and when you come to the underwriting. Now underwriting is using a lot amount of surrogate data at this moment. Underwriting, one of the biggest problems is that, time it takes from conversion and change in the policy to the business rule engine. It's the longest period, and which is where the most of the challenges come in most of the lenders, because they have so many types of products, right? Now, we have seen, I mean, I was interacting with some of the young people who have been just selected for Y Combinator. They are pitching that, from a document, Word document, using Gen AI, they will convert into the code into the BRE. So basically from a, policy of your lending policy will convert into the business rule in a matter of, let's say, hours or a minute or a day, which normally takes sometime even 1 month or 2 months, right? So there's a waiting period to change the product. So at times, lenders are keeping hold on that because the technology is not able to cope up with the, the change of need of the market, right? So these are, I mean, like even RBI, whatever are the guidelines have been reviewed again, and, some of the caveats have been withdrawn. I mean, any of these things coming, actually, it does take it's a lag time. AI could reduce that lag time significantly. Then last point I want to make is that fraud detection. See what happens, why lenders are wary of giving loans or why they are overcautious. Because there is a fraud. There is an element of fraud which is significantly prevalent. I mean, there's synthetic IDs, duplicate IDs, mule accounts, you name it, right? AI could help a lot because humanly it is not possible to track everything and figure it out, right? So wherever there's a human angle, it will delay the process. So AI, as soon as it reaches a certain level of accuracy, it is able to basically safeguard the interest of lenders, and then they are able to basically make a decisions more confidently, right? So these are some of the 3-4 things I just thought I'll share with you. I mean, obviously we can go down into even how bureau score is calculated, how MSME score is calculated. There is a lot of ML machine learning being used for specifics. I mean, like how to be doing for MSME, how doing for affordable housing, etc. But those are very, very, I would say, granular level stuff. Broader level, this is what something is going to be very beneficial. Yeah.
Interesting. Manu, if I can bring you in, and similar question, with the general concern over NPAs, especially from this sector, because a lot of the loans are also non-collateralized, and as they should be in certain cases, but that balancing that. And there was, when Mudra first started, a lot of concern over whether many of the loans will end up becoming NPA or not, and I don't think it was a very big problem. But do you think AI and ML and things like this would also help kind of assuage those kind of fears, because you have more data and you would probably be able to analyze and figure things out better?
Yeah, absolutely. So I think this is today morning's headline in Economic Times. 50,000 crore of microfinance loans are NPA right now. And Sachin would know it because
Are NPA now.
NPA on a book of around 4,50,000 crore, right? And Sachin would know it because the data has come from CRIF. That's 13% of the gross book is NPA right now, right? And almost a similar story, maybe to a lesser extent, has been playing out in the probably in the SME sector, especially the unsecured SME sector, and also small ticket PL/credit card loans, right? And I don't have a data for the SME, but I know anecdotally, right, some of the marquee NBFCs who were focused on unsecured SME, if you see the news items last year, one has done a first loss in 9 years, after 9 years. The other one's profitability has slashed by 98%. In fact, as much as, they've been taken over by another, strategic player, right? Because they have to infuse equity and all that, right? So there is an undercurrent of, NPAs and stress and so on and so forth, right? I mean, one question is it even possible to do financial inclusion when your portfolios are under stress? Right? That's another question, right? In fact, as early as beginning of 2024, when I was meeting microfinance business heads, they were already telling me, these things, that we are tightening the underwriting rules, we have stopped lending in this geography or that geography, and we are only lending to our own good repeat customers. I'm not lending to any NTC customer, which is the essence of the financial inclusion, right? One microfinance business had even told me, I'm talking about 2024, even before all this, become public news, right? That they've stopped all disbursements in the microfinance segment, and their portfolio will degrow in 2024, right? So again, the point is, difficult to practice financial inclusion when NPAs at this level, portfolios are under stress. And also, I have in my previous point, I was, singing praises about data and models, and let me now give a counterpoint to you as well, right? So what happened, right? It's not that in microfinance industry there were no guards, right? I mean, RBI had already put 50% of the household income as affordability test, right? The SROs have their own, responsible lending kind of a framework there, right? But still, all of this happened, right? One view to say is, maybe the data failed us, or the models led us astray. That's one way of looking at it. The other way of looking at it is, that probably the models told you a little bit more than you could have guessed otherwise, and hence, that 50,000 crore could have become 1 lakh crore. There been no models, right? That's another way of looking at it. Yeah, that's another way of looking at it. Or the third way of looking at it is, it's not the model's fault, it's the fault of, the aggressive growth targets that we have as an industry, or the banks, NBFCs, microfinance institutions have set up for themselves, which led to all this over-leveraging, over-indebtedness, and hence the falling NPAs, right? That's now coming back to your point on AI, right? So I think the good thing about AI, is obviously, that AI can be used for surveillance, credit monitoring, and so forth. Again, imagine a scenario, if AI is mature, and if AI could have told us in 2023, that come 2025, because I'm looking at all this huge amount of macro data and microeconomic data, trends, and so forth. If AI was mature, I could have told us, in 2025, you will have 50,000 crore of NPAs, right? Imagine, if that could have been, that's the hope, right, for AI, that AI as a big tool which can analyze huge amounts of data, and obviously it needs huge amounts of data, which probably, models or, human intervention cannot do, could tell us in advance, can give us early warning signals so that we can course correct as an industry, right? So that's the role I believe the AI will play.
Yeah, and I sincerely hope so, because I think you make a very good point. If your your NPAs are going to rise, and if the targets are going to be so aggressive, it's going to become counterproductive in terms of what you lay out for financial inclusion. Sharon, let me come to you. With what Manu just said, what do you think the reason for these high NPAs are? Why do you think people, especially for the microfinance sector, they cater to small businesses? So what's going wrong? Is it got to do with ease of doing business in terms of what, are they facing trouble there, which is resulting in them not being able to grow or pay back? Where do you think the problem lies?
Yeah, I don't want to address, I think it's a bigger complex, this same issue. So a lot of data analyze, as soon as you get more than 40% debt to income ratio in your household, you become very at risk as well. So I think there's a responsibility of the lender how to get to that. And I don't blame them as well, because, They don't have any way of assessment, and these are like dual rules of thumb. I do notice, and I think Sir at the beginning mentioned Mr. Singh, what happens is my understanding, and this is not the fault of anybody, but a lot of these NBFCs tend to optimize and have agents on the ground and do top-ups. So they don't necessarily try to bring new to credit people and try to gain their portfolio, etc. When I studied, like maybe a couple of very good organizations are keen to look at the underserved segment, but it's easier for them to do a top-up, have an agent on the ground, and that's their business model as well. Because when I ask them, because now so what I see in some of the data we saw is between 10 and 12% new to credit people. I don't know what the official figures are, but there's also always some discrepancy, and sometimes I see playing of the figures where, like they would say in the past 3 years, among the loans, these are new to credit, but we don't understand the underlying sample. But I would say it's very low. So it relies on the business model. It's sort of like one of those wicked problems where collectively you have to figure this out. The other thing I noticed, and this maybe it's not related to the NPA crowd, but I think someone said also like you need to have like timely payment and all of this, credit and cost-effective payment, but you also need to have enough money. So sometimes even if you have money and time at a good interest rate, the amount is not enough, no? So they might actually not put it to productive purpose to the business. I'm not saying this is actually what happened, but even when you talk to NBFCs, after they go through all these things, then they say, okay, if someone needs 5 lakh, we'll give them 2 lakhs. But if someone needs 5 lakh and it's fungible, they'll go to somebody else. And then you get in the habit to say maybe it's not enough, so then you accumulate. So I think there's a lot of these like interconnected behaviors that one should look at the system smartly, and maybe some of the solutions provided here with AI and things like that. But there's now, I think in the past 10 years we solved the big layered problems. Now we need to get to the heart of the interconnected issue to solve that. That would be my suggestion.
Fair enough. Thank you. Mr. Mittal, I think you need to leave, but if I can ask you one last question before you go. So as I said, the two emerging things, one of course is AI, but the other thing is ESG and green financing and sustainable financing and how that needs to seep into the psyche of MSMEs. And I think SIDBI being what it is will have to kind of set this, landscape for them. So what is SIDBI doing? Is this something that's, at the forefront for you, or is it something that you're still building towards?
ESG, the in thing as of now. But when we talk of ESG, generally people will take only E part only. S and G are treated separately, and so these are three different elements, and they are treated in isolation. We don't see any kind of synergized strategy and then coming out. But it's still evolving. We can't really say much about it, but it's still evolving. Something is evolving in the S part, at least when we are talking of microfinance, responsible lending and all that. It becomes part of that S part. Now coming to E part of it. Again, you can't really thrust upon some MSME borrower. It has to be something, it has to become part of your policies, and it has to be something which has to happen for the banking sector as a whole. Till there are some kind of a arbitrage available, because ESG has got a cost in terms of monitoring, in terms of implementation, it has got a cost. And in case of MSME, anybody whosoever wants a loan for sustainability or environment or energy efficiency, and they look for concessionalities, which is a harsh reality. And people don't have those kind of money. Bankers don't have. Even if they are raising a green bond, I'm afraid it's not a cheaper source of money. And even international funding, whatever it comes, amounts are small, and it doesn't have much of effect. It's not a cheaper source of fund. All those cheaper sources of fund are being given in the form of blended finance. So the word going forward should be blended finance, wherein large facilities have to come internationally or nationally, so that some kind of a concessionality is passed on to the MSME. But before that, banking sector has to do a lot of homework. We are already part of GCF. We are working in that direction. And MSMEs will have to be taught that by bringing these environmental best practices, they are going to reduce their costs. That's what would sell. Any MSME, if you want to encourage him or her, you can do it only through two ways. One is a regulatory. If you don't do it, he'll come. He can manage even that also. So if you tell him that you're going to save some money, your payback period is going to be 2-year, 3-year, 5-year kind of a thing, then probably he is into it. So unless we make a business case of it, it's not the offtake is going to be very, very slow. If we make a business case out of it, I think they themselves will come. Why don't you give me a loan for the solar rooftop? Why don't you tell me which is going to be a more energy efficient machine? So that business case, that commercial orientation, I think it has to come with the bankers also, with the machinery suppliers also. And they have to educate, you take this machine, this is 30% more efficient than the previous machine. You will save so many units in 1 year.
No, very true. I agree with you. Actually, in my earlier organization, we did a seminar on ESG with the National Stock Exchange. And one study that they did was exactly on this, where they looked at listed companies where it's mandatory for them to report. And they found those who were ESG compliance or higher ESG compliance, their profitability was high. So as you said, for MSMEs particularly, unless it makes business sense and monetary sense, we don't see anyone else really adopting. We have about 4-5 minutes, so we can take 1 or 2 questions if there are any. Hands up, please. Okay, 2 questions. Please introduce yourself. We'll take both questions together. So, and we can, while answering, we can do a final round of concluding remarks. Please do introduce yourself.
Yeah, I am Dinesh. I am from Panipat, and I am dealing with the MSME textiles manufacturing industry there. So, as it was said that for the machinery which are energy efficient, are there some special loans to promote such machinery, for energy efficient machinery? What is the encouraging to the entrepreneurs and to promote on the lender side on a preferred loans for them? What are the schemes?
Okay, thank you. There was another question there. Yes, please. Also, if you want to address it specifically to somebody, please do say that.
Hi, my name is Anushri. I am a national awardee for setting up the railway website. Now I'm consulting a couple of firms, AI technology. Question is, I think maybe towards the entire panel. So how do you see the business rule engines for the rating agencies, CRIF, and even for SIDBI? Is it like closed loop? We are talking about APIs, we are talking about data, user privacy. So maybe I get as an MSME a loan from X bank, but I do not get from the other bank. So the rule engine may work on my bank statistics, it may work on my GST data, it may work on my past credit, which I would availed of and I've been able to pay. So does the government think in those lines that there should be a common gateway and these kind of agencies which allow or disallow the funding of MSMEs, could be male or female, irrespective? How does it work? And secondly, we were really talking about women as a gender. So is SIDBI also concentrating or targeting on not just making women capital intensive for their MSMEs, but making them more educated in terms of how to spend that capital? What is the ideology to raise their profit and maybe their books, making them more positive? So because they are already not so financially adept at it. Thank you.
Thank you. I think this gentleman in front, and that will be the last question we take. Yes, please. Could you? Yes, please. There, it's right there. Please do introduce yourself.
Yeah, my name is Dr. Sarojit Dudeja. Manu, can you give some clue about, we used to say there was a huge round of corruption when Rajiv Gandhi was there. To what extent we have resolved through our digital system?
Okay. Thank you. Manu, why don't you start? We'll go down. So if you can answer whichever of those are relevant to you, and maybe conclude with one thing you'd like to see happening now. As a next step, what would you want us to do?
So I think the point, I think it was addressed to me on the corruption, right? Okay. So I'm not an expert on these matters, but all I can say is, if it is a digital ecosystem gets developed right, then everything is more transparent. There is no hanky-panky which will happen, when it's a paper-based system, right? And that's what, we hope that, that will, help addressing your concerns about corruption to an extent, right? But again, no system is foolproof. We will always have, people will find loopholes. If somebody has to do something, they will still find loopholes. But hope is, that when there is a digital footprint and, everything is done on a faceless, paperless manner, then some of these things will get addressed. Yeah. My final, takeaway is that, this is a panel on the financial inclusion. My final takeaway is that financial inclusion is a tough business. It requires a lot of efforts in terms of data technology, even, having to bear some NPAs, but all of us, will get there, and hopefully, the rewards at the end of this would be worth it. Yeah.
Absolutely. Thank you. Mr. Mittal, please.
I think there were pointed question. There are certain schemes. You can go through the website of Ministry of MSME. There's a scheme called SPICE, which helps MSMEs in acquiring energy efficient machines. There is an interest subsidy element of about 2% in that. So you can have a look. There is a list of about 600, 700 approved machines in that. So one can go through that. And another question was about, what we are doing about women and then AI, how do we go about it? So, the rating models, there was a question about the rating models. So in the recent budget announcement also, there was a mention about a common rating model. So Ministry of Finance is in the process of getting a common rating model developed for all the banks. So now what you said is right. One may be accepting that particular kind of risk, another may not be. So that's where the MSMEs sometimes find it challenging. Ex-banker gives, why he doesn't give? So now there is a common rating model which is being developed, and this will have some kind of common parameters. So this is a work under progress. Hopefully with that, it would be a lot of standardization in MSME underwriting, which is the need of the hour, rather trying to have every time a customized loan product, which MSMEs may not need. They need some kind of housing loans or the car loan kind of a thing. You can get it anywhere. कार डीलर के पास में गए, डीलर में पीछे में बैठा हुआ है. Something of that sort will happen, should happen. And coming back to AI, and well, this is something, it's touching everybody's life, including an institution's life. A lot of institutions like SIDBI have started looking inward, and first, the point of reference, the area which we have chosen for ourselves is how do we improve our productivity. So there are a few things which we are working upon. Maybe it's early to say something about it, this work in progress, but initial results appear to be satisfying. It appears to be working very well to reduce, to improve overall productivity.
Thank you. Sachin?
So I think questions are already answered, I guess.
So your last concluding
point. So I would say, one thing is, I think we did talk about, rating models, and I think some of the questions were around that. So I think definitely one thing I would like to put it in the other way, that, lenders, government are doing a lot. I think there is a need, like which I mentioned in the beginning, that, about the financial prudence, literacy, etc. And as a CRIF or otherwise as a ecosystem partner, we are working with many association or cohorts of people wherein we would like to work with the MSME group to help them understand how credit assessment is done by the bankers or lenders, or how bureau scores are calculated, or how to read their bureau report, right? So I think, because what happens is that when you are applying, obviously there is a grudge or there is a complaint that, I don't get it, I get it at high interest rate, I don't get it to the point. And sir already mentioned that, some of that standardization will happen. But as a borrower, we also carry certain responsibility. And I think it is, we as a CRIF are very keen to work with all the ecosystem, and I'm sure there are many others, and SIDBI does a lot of work on that. So let's also focus on literacy of people who are borrowing, so that, they are able to identify the right sources and they are able to create the right kind of applications that, they get assessed faster and they get a better rates on that.
Absolutely. Yeah. Perfect. Thanks. Sharon, you're quick.
Yeah, I just say we need more convergence. That's
you
my
need
final,
more convergence.
Yeah.
Short, sweet, and succinct. Thank you very much. I think this was an excellent panel. For my 2 or 3 takeaways, obviously AI, ML is here to stay, and we work with data better. And there is a long way to go, and financial inclusion is becoming a difficult business now. But as Sharon very succinctly put it, we need convergence, and it's not about going fast, it's about going far. So hopefully we get there soon, but we get far as well. Thank you. Thank you so much, all of you.